All right, good morning. Good morning, everyone. This is weekly outlook, and during this session, we look at the markets. Basically look at the opportunities that we expect to see in the market this week, right? Where do we expect the market to head to, this week, based on the data that we have available to us, right? And by data, I mean fundamental data and technical data, right? Where is the market likely to go today, go this week, based on the data we have available to us, right? So that's what we attempt to look at during the course of this session, right? Um, sorry, 1 minute. Right. So that's what we intend to do during the course of this session, right? So we'll start from the fundamental side of things. Let's look at it. Uh, First and foremost, we'll come here. What's the market looking like this week? Right, so we'll start from Monday. We see that Monday there is really nothing in the market to look out for. On Tuesday we have CAD, CPI data for Canada, and that data is expected to come in this week at 3%. Was 3.1% was 3% last month actually. It's expected to come in again this month at 3%. Then on Tuesday, we have the same CPI. CPI means Consumer Price Index, which is basically a measure of inflation, a measure of inflation. So for the UK, which is GBP, we expect to see it was 3.8% last month, which is quite high, and is expected to rise to 4% this month, which is even higher. Okay, so which means that in the UK, we are seeing a lot of increase right now in prices and all that, right? So that's something to keep an eye on. Usually when you have this data, it tends to bring volatility to those currencies. Okay, so you notice that GBP pairs might have quite some volatility in it. GBP pairs might have quite some volatility in it because of this CPI news. CAD pairs might have some volatility in it due to this CPI news, right? Now, we said before in the previous session that the main data that tends to drive the market uh, more than others are in three categories: inflation data, and that's what we call CPI now, interest rate data, and then employment-based data. So any data that falls into inflation, i.e. CPI, um, interest rates, and employment would tend to drive volatility in the market because this is what goes to the core of an economy. Okay, these three things goes to the core of an economy. How an economy is performing is measured by inflation, interest rate, and employment, right? So whenever any of these three data points hits the market for any particular currency pair, it tends to have an impact on that currency pair, right? And currency pair and any currency pair that's attached, that's connected to that currency itself. Okay, so for CAD now, you might have pairs like USD CAD, CAD JPY, AUD CAD. Any CAD pair will be influenced by that particular news event, right? And the only situation where it will not have an effect is if the data itself really doesn't mean much in the sense that the data itself is not significant in any way, shape, or form. Okay. So if it's not significant and it's just the way it is, like you have 3% last month, now 3% comes out this month, it may not be a big deal for markets. Then you won't see volatility. But if it's something that is quite volatile and it affects this currency pair amongst these three data points I just mentioned now, it is going to really bring volatility across the pairs that are connected to this currency. Okay, then on Thursday we see there's nothing much, also nothing really. Then on Friday we have a lot of data points here. So we have mainly on Friday we have manufacturing and services PMIs. PMIs, Purchasing Managers Index, right? So whenever this comes out for the UK, the Eurozone, and the US on the same day, it tends to be quite volatile, right? So we're expecting to see some volatility in the market this week, but on Friday. So when you look across, you don't really see much happening this week besides Friday. Friday is where you see all the news happening. All right. And then also on Friday, we're expecting something very key, which is CPI data, inflation data for the US. This is significant because the market always tends to wait for it. It tells us where the Federal Reserve is going to go with interest rate, because interest rates and inflation are connected in one way or the other. Whenever inflation is rising high, interest rates need to follow that trajectory as well. Whenever inflation is coming down, interest rate tends to come down as well. So they are interwoven in one way or the other. So one will have an outcome that is the other. When inflation rises, interest rate needs to go up to counter that inflation. When inflation comes down, interest rate needs to come down as well to balance it out, and also to help the rest of the real economy. Okay. Now that's what we're expecting for this week. So let's go to the technical side of things. For the technical side of things, we'll just run through a few instruments here. We'll start with the dollar index. We usually start with the dollar index because the dollar index is the most significant one in the industry, across instruments, because the dollar underlies the major transactions in the world. Most transactions in the world, more than 80% of transactions across the world, is done in dollars. So whatever happens to the dollar tends to cascade across board. Okay. And most instruments are connected in one way or the other with the US dollar. So we have the dollar index here. You can see the dollar index here has been stuck inside this range since the market opened. So there hasn't been much movement since market opened. But when we overall, we go to a much higher time frame and we want to get clarity in the market, what we are seeing tells us that we are expecting to see more weakness in the dollar. We're expecting the dollar index to sell even further, right? Now, before the dollar index sells even further, the market doesn't go one way. If you're expecting a sell, the sell won't just happen at once. It won't just happen like a straight line all the way down. And if you're expecting market to buy, you won't see it as a straight line all the way up. Okay. So there are always these impulse corrections, impulse corrections, impulse corrections type of movement. So you have a movement that is wave-like in the market, right? So last week we see that the dollar index dropped from a high of around 99.20 and all the way to a low of 97.75, right? Now, what do we expect? We expect it to pull back again into this zone, this 98.500 resistance zone, and then sell from there, sell all the way from there, right? Last week we had analyzed and we had thought the dollar index was going to sell to around the 98.200. So 98.200 was around this area here. That's what we thought dollar index was going to sell. So the dollar index actually sold and got to that level, sold and got to that level. But we see now it looks as if the market is setting up for a sell, is setting up for even a further downside. Now, next week we're going to be having interest rate FOMC for the US. FOMC is the interest rate committee meeting, right? The Federal Open Market Committee meeting. That's when they decide to increase interest rate or reduce interest rate or do nothing about interest rate. Yeah, so that's next week. And usually the market has this perception already that the interest rate is going to come down. And when that does, the dollar tends to fall when that interest rate is about to be out or is expected to be reduced. Whenever interest rate is expected to be cut, the dollar tends to sell. Or even when the interest rate is cut, the dollar sells, right? So what we're expecting now is that the dollar might be trending down in anticipation of that event next week, right? So that data, we call it being priced in, which means that as the market is already doing what you expect it to do when the rate cut happens next week. All right. So that's what we're expecting to see now. Expect the dollar to buy to this zone, the 98.500 zone, and then sell all the way to 97.100. Now, if that's going to happen, what do we expect from the Euro US? What do we expect from Euro USD? For me, what I'm expecting from the Euro USD right now is I'm expecting Euro USD to dump into this level. This level here is quite significant for me. This is what happened last week. We see Euro USD bought all the way up. Now it's making a pullback. I'm expecting that price will get into this zone here, this 1420 level, 1.1620 level, and then buy from there. Okay. So the way we're going to trade this is that we'll wait for price to get into this zone here. When price gets into this zone, it gives us a bullish signal. Once we get a bullish signal, that's when we'll be getting on the trade. As much as we expect price to come here, we also know that the market is the way the market behaves. Sometimes price can go below here. We know that. So what we want to see is that we want to see price hit this zone and give us a reversal pattern, give us a bullish signal, a reversal signal. So when that reversal signal hits we see a reversal signal somewhere around here, then we will ride it to the top here. Okay, so patience is a very important virtue when you are looking to trade the market in a proper way. So you want to be able to see the market play out in a certain way, then you follow the trajectory of that move rather than anticipating it. Okay, imagine we say just make a buy here now and wait, just set a buy order here and wait. Now that's not a bad one too, but why not wait for price to come to this level, then give a reversal pattern, a signal telling us that bullish volume is getting into the market, bullish volume is getting to the market, and then we're able to get on that buy. That gives us another level of confirmation that what we are expecting to happen actually happens. Because you can expect something to happen in the market and it doesn't. So what we do to make sure that we get to a certain level of confidence is to pile on what we call confirmations. Right? So when you have 1, 2, 3 signals telling you the same thing, which you're already expecting to happen, that is confirmation. It's telling you that, oh, this is actually going to happen. The chances of this happening is very high now because I'm having several signs, several signals telling me the exact same thing. All right? So we're going to wait for that to happen there. Then let's look at gold. What do we have on gold here? So gold is playing around a little bit. Okay. This for me, this is where you want to be patient too. This is where you want to be patient too. Can you see this now? Gold made a huge sell after it hit a high of 4,375 last week, made a significant sell, all right, and then terminated here. Now, based on our analysis, we can see that gold is still yet to sell to this zone here before it buys majorly. So for us now, if we start to enter for a buy here, it's not so clear. The market is not so clear. So you want to be able to wait for it to be clear. This could be an impulse here, impulse correction, and then price sells to this level again. That is what we have to wait for. For me, I'm expecting price to hit the 4,160 level. The 4,160 level. When price gets to the 4,160 level, you should be able to, that's when you want to get in the trade. But until price gets there, what we're just going to do is watch and wait. Just watch and wait. Okay. Now, if you want to do short-term trading, you can basically sell from here to come down. That is, for me, I won't be so confident as to take that trade at this time because gold is extremely volatile. Gold is extremely volatile. So I want to be able to trade gold only at levels where I'm very, very, very extra confident. I have extra confirmations. I have multiple confirmations telling me to buy. When I see that extra confirmation, then I get in. But until I see that, I would prefer to hold off and wait. Now, it's possible that price could just make a sudden jump up. Yes. If price makes a sudden jump up, that's fine as well. So it tells me that price is not coming down here. It actually has bought from here. What I would do is then is position myself for a buy because markets will not just go up all the way, right? It might not just go up all the way. If it goes up all the way, there will still be opportunities to buy. But at that point, you have good quality clarity, right? Many times traders don't look for clarity. Many traders don't look for clarity. They're just looking to let me not miss, let me not miss, let me not miss. Fear of missing out. Now you're not thinking what happens if I miss, what happens if I get on a wrong trade? I lose money. So it's better I get double confirmation. But you're thinking I don't want to miss it, I don't want to miss it. So you have to, take care of that mindset that has this fear of missing out, and rather focus on getting the best setups that you can get. What we call the A setups, A level setups, setups that are the best for your trading method, for your trading style, right? For me, I'm expecting price to dump to this level, 4,160, and then buy. Okay. Um, Bitcoin is also something I've been looking at, and Bitcoin has been moving in a downward. I've been doing downward moves recently. Okay, so you can see that Bitcoin actually made a huge sell. Bitcoin made a huge sell um, the other day when Trump announced tariffs, right? Okay, so now you can see that price is trying to get back on its feet, as it were. Price is trying to get back on its feet, but it doesn't quite look like that at this moment. So we have certain levels here we have to pay attention to. We have a resistance level here somewhere around the 116,000 level, right? From what I see, basically, I'm expecting um, BTC to sell to the 100,000 level. This 100,000 level is basically is the main area. If price corrects to the 100,000 level, that will be the major level to buy. Once you see a good signal there, you want to buy, and price is likely going to return all the way to that top of 126,000. But BTC has its way of playing around, right? So what it's doing right now, I'm not so sure, but I expect that price at least will get to this resistance here around the 116,000 level. That's what I'm looking at. But when price gets here, who knows? It might very well sell. For me, I'm confident that if price gets to the 100,000 level, it will be the best place to buy. Okay. For in the meantime, if you based on your strategy, if you want to trade in and out, it's fine. But this may not be a point where you want to buy and hold all the way up yet, because I personally do not think that price has gotten to a bottom. I don't think price has gotten to the bottom that it should get to yet. And I think that bottom is sitting somewhere around the 100,000 level. Maybe 98 to 100,000 level is where the bottom of Bitcoin is at this moment. Okay. But in the meantime, of course, you can trade, do your technical analysis, trade support, resistance, and all, and pick profits from that. But if you want to buy and hold, like buy for a long time and hold it to that top and have a huge, maybe 25% growth on your money, on one trade, I personally be waiting for it to get to somewhere around the $100,000 level. Okay, so that's for BTC right there. So this is still the beginning of the week. We see we have US oil. US oil is also one instrument that's been selling very heavily. It's been very bearish for a long time, and there are many factors responsible for that. We expect to see that sell-off continuing all the way to 55,000. It's been selling very aggressively. Can you see this? It's been a very strong downtrend recently, and even last week it sold as well. Hit new lows again at around the 56,000 level. So the $56 level, and now we expect price to drop all the way to the $55 level. So for me, oil remains very bearish, but when it comes to entries, that's something that we're going to be giving you also in the group. We don't have any entries to give out at this moment. So in the group, we're giving you some signals already in the group, on the Telegram group. So if you're not on the Telegram group, please make sure that you go to the Telegram group and check what is going on there and what trades are being sent out there, and then take them. Once you see a trade on the group, on the Telegram group, please take the trade. And always remember that what we are sharing here are basically trade ideas. Always remember that trading has risk involved in it, and you want to be able to risk not more than 2 to 3% of your money, which is basically money you can afford to lose, right? You don't want to risk all your money in a trade and just say, okay, because I know this thing is going to happen, let me risk all my money. It's not wise. Investing is not wise trading. Okay, trading is a form of investing, so you want to treat your money very importantly. The goal for you is to always keep your money, always make sure that you don't lose your capital. And the way you do not to lose your capital is to risk the amount you are willing to lose, which is more than 2 to 3% of your capital. All right. So we're going to end this session here right now, and then we are going to we'll end the session here right now. We'll give you more updates and trades in the group. Please keep your eyes in the group and make sure that you're following what we're doing on the Telegram group. Okay. Thank you guys. I'll see you guys on the next one.